Director with Apollo Hospital Enterprise. Ms. Reddy, good morning. Thank you for joining us. How has the quarter been for the company, and what are the key factors that has helped the company to grow?
Yes, I think that in terms of factors that help the company to grow, clearly the structural demand for healthcare is very strong in India. And I think we are riding on that growth wave. It will continue to do so because of the shortage of beds in the country. And also, we've created a network which there is a requirement and a demand in the country for such a network that includes hospitals, primary care clinics, diagnostics, pharmacies, and everything coming together through a digital app. And the growth that we had this quarter came in at 5,592 crores, which was a 13% growth, with an EBITDA of 770 crores, again a growth of 20%, and profit grew by 51% to 390 crores. So that was our consolidated top line EBITDA and profit. In that, healthcare services grew by 10% to 2,822 crores and 686 crores of EBITDA with a margin of 24.3, which is 114 basis points improvement over last year. Profit grew by 37% to 385 crores. So that is healthcare services growth.
All right. Hi, good morning, Suneeta. Also help us understand that how was your the performance in the insurance business in terms of the numbers? How much did the segment clocked in? Because last time the company has said that they are speaking to some tie-ups with some insurance companies. So give us some update there.
Right now, it's they are testing the product. They are working with Bupa. And when they roll it out, it will be very margin accretive.
Right. So, Ms. Reddy, from this quarter, should we expect some contribution coming in from your insurance business as well?
The current fiscal year, yes, you will see.
Right. And what about Apollo 24/7? How much of the GMV has come in from that particular segment in this quarter, and what about the break-even?
So I think they are at 795 crores of GMV. And clearly, in terms of break even, they posted an EBITDA of 36 crores and positive PAT of 9 crores, which was really their target was to show profit. And they have done that in the fourth quarter.
How has the occupancy levels been this quarter and what are you expecting for FY26?
So this quarter we were at 68% occupancy, an improvement from 64% last year. And we are quite sure that in the first quarter we should get closer. The interesting thing to note is that in metros we crossed 70%. We were at 72%. In some of the tier 2 locations we were slightly lower, and therefore the average at 68%.
Last quarter, occupancy in Tamil Nadu was down partly due to reduced flow of patients from Bangladesh given the geopolitical situation. Help us understand how is the situation now?
So Bangladesh, you're right, it was lower. And, it affected top line by 1%. Going forward, we are optimistic that, patients still continue to come. We do hope that the volumes improve, but we have de-risked Bangladesh and are looking at new markets and quite confident that our international business will pick up in this year.
Right. Ms. Reddy, last time when we spoke, you said that you're going to be entering Sri Lanka as well, also the Indonesian markets. What's the update there?
So Bangladesh, we're entering in the sense that, we are, getting patients from Bangladesh. We're facilitating these visas. In terms of Indonesia, we have signed an agreement with one of the big hospitals there, but we will take it forward in terms of how do we bring more patients into India. Currently, we do have some patients coming into some of our facilities.
But help us understand what are the expansion and the capex plans for the company for FY26, and what about the Bangalore expansion plan?
So Bangalore, is a very good market. We are adding 700 beds in Bangalore. We currently have about 750. With this, we'll have 1,500 beds, and more importantly, we have 2 cradles and 2 spectras and clinics. So we'll have a very good network. So we will, we're looking at doubling our market share with this investment, and this will happen over a 2-year period. Capital committed for all expansion currently for the next 2 years is 3,000 crores. This includes Hyderabad, where we're expanding in Secunderabad, adding 350 beds in Gachibowli, as well as Calcutta, where we're adding another 200 beds, and Pune, 250 beds. And of course, Gurgaon, which we've spoken about earlier. So these will all go live by the end of this year. Some will happen, in the third quarter, some in the fourth, and maybe some in the first quarter of the next year. But we're looking at adding 3,000 beds.
Right. Also, Pune, Kolkata, and Delhi, they were expected to start in the first half of FY26, right? Are you on track for that? And what about the break even for Delhi and Kolkata in specific?
Yes, we are on track. The break even for Calcutta will happen in the third quarter of the year. We are very much on track for that. In terms of Delhi, last quarter of the year. Gurgaon is last quarter of the year. The break even for all of these, we predict that the larger hospitals like Gurgaon will take about 14 months for break even. Calcutta, the smaller ones will happen much, much faster.
So till which quarter are you eyeing the break-even in Kolkata, Kolkata chain?
Kolkata will happen very fast. We believe that within the first year it should break even. Because our occupancy at the existing hospital is already crossed 80%. So there will be a spillover effect. It will break even faster. We already have momentum and good doctors in Kolkata.
All right, Suneeta, given the fact that it has been a steady quarter and a full financial year for the company, what will be the guidance for FY26 in terms of revenue, EBITDA and margins?
I think historically, we are very sure that in terms of existing assets, yes, we will grow above 14%. New assets will really drive the growth in the future. We should be looking at above 17%. And in terms of EBITDA, I think, we've always shown strong traction in EBITDA. This will be aided by cost measures going into the future, into the next year. And we should have a steady state EBITDA of 24% next year.
Right. And what's the cost of acquisition for this Bangalore facility? And when is it that we can expect that to break even?
220 crores. It'll be accretive in 1 year. We should break even.
All right, Nalini Kant.
If you like this video, then like, share and subscribe to ET Now.